Begin. So today we are two people who work on this presentation or who take a part as a referent in this webinar, me and Philip. Philip will support me. English is not my first language. This is my third language. So if you will find some mistakes on the presentation, or I take too long time to explain something, or to take a long break, so please excuse me, sorry for that. And the Philip will support me if I have blackout or something like that, because this is my first webinar in English. So, and also end of webinar, Philip will show also some topic. So, Philip, say hello to the people, please.
Yeah, hello everyone. Good to see you or to meet you. And yeah, I will talk later in the presentation about details for our coaching program.
Okay, let's start. So you can see the stats on the screen. 20% of traders are profitable. These stats you will find on CFD brokers, on other brokers' sites, and you can see you have the probability that you are profitable or that you will be profitable is not so high. 80% of traders lose their money, and my goal is in this webinar to show you which technique can help you to improve your trading and to increase the probability that to belong to 20% of traders who are profitable. So let's start. So maybe some snapshot about me. My name is Max Schultz. So 2017, I had the first touch with the stock market during my study. So we had a professor. He was very patient in trading, and he presents some trading strategy and also some trading results. And from that point, I was excited, and I read everything what I found to trading, to financial markets. I read too much, and so I read too much, definitely, but it was my start. So 2010, I finished my study. I got my diploma in business administration, major in finance. So I was, I wanted to trade, but the problem was last 5 years I was student and I had no money for trading account. So I started office work in the office, normal work from 9 to 5 in a big commodities company in Germany. So, and I began to save money from my salary. So, and first of all, I invest in my education, because the idea was if I save money for my trading account and I will start to trade, but I don't have the skills how to deal with risk, how I don't have right strategy and things like that. So I will lose money for sure. So, and I decided to invest my first money in education. So to learn how to trade, how to deal with risk, so to get right skills. And during this process, I saved money from salary again for my trading account. So in 2014 was the start with real money trading, also with real money. So with futures according or based on COT data. So April 2016, I decided to quit my job, so and to become a full-time trader. And 2016, end of the year, I create a trading block inside the -week.com. DE in German language, first of all, and I think 2 years ago we also create a blog in English. So 2017, it was always my dream to take a part in World Cup Championship of Futures Trading in USA, and I did it in 2017. I ended up with third place with 111% return PA. So this was a great result for me. I was invited to the oldest commodity exchange in Chicago, in USA, in Chicago. So I got there my trophy. It was very nice experience for me, and also it was a good motivation to do that what I did before. So 2018, I had a baby break because I'm married. I have two beautiful children, boy and girl. And 2018 come first child, and because it was first child, it was everything new, and I decided to focus me on family, on this experience, and to take a break in trading. And 2019, I was back. 2019 and 20, I took a part in competition. So and ended up again third place, 1, 2, 3, yes, third place, but this time with more profit. The end of the story, it was 165% return. So this was my highlight of my career, or this is a shortcut for my trading career. This is a trading, or this is account equity from 2014 until 2020. The start at the beginning, and the account was only $14,000, and now we have more than $600,000. So for this, we needed 7.5 years. So let's take a look what I want to present in this webinar. First of all, I would like to speak about COT report, COT data, because this is legal insider information for free. So COT data is free information for everyone and simple and robust COT strategy. I will show you what is important to have in your strategy if you want to have a robust strategy. So and on the next step, I will show you some trades based on COT report, and we'll speak. Philipp will speak about his experience in the coaching program. So let's start with commitment of traders report. Commitment of traders report is comes commitment of sorry. So commitment of traders report is report that prepare US regulator for futures, CFTC. So this is a government department and regulator for futures trading. And they prepare this report and post on their website, cftc.government. So this report comes every Friday, end of the day, but the data is from Tuesday. So this department needs 3 days to prepare the data. And why they post or they prepare or they show this report to the public? Because the transparency. So in this report, we have big players who have the power to move the market, and US government say, okay, when we have in the market big player who has this power, the public should know what they do, which position they hold, in which market they are involved or commitment. So, and if and the big player have to report tire position to US regulator, to CFTC every week. And this is for us is insider information for free, what we use to get edge in trading. So here you can see a COT report. It is not in this form a lot of figures, and it is not so easy to read, but let's speak about what you can find in this COT report. First of all, we have 3 groups of traders. So we have commercials, we have non-commercials, and we have non-reportables. Let's start with commercials. Commercials, this is a group of traders, of big traders with power to move the market. In this group belong producers, for example, sugar farmer, and also companies who use this commodity for tire production process. For example, like Coca-Cola company, they use a lot of sugar for Coca-Cola drink. So this group of traders, they have no interest to earn money from futures market, no speculation interest. So they want to hedge tire risk. For example, sugar farmer want to hedge the risk of price movement not in his favor. So, and also Coca-Cola company want to hedge the risk of price movement in not their favor. So, and they use futures market to hedge the risk. And on the other side, non-commercials also cause large speculators like banks, funds. They take this risk, and they take this risk because the goal of these large speculators, big players, to earn money. So, and therefore, speculators is very important for this process because they take the risk because they want to they want to speculate. So I hope I explained it correctly. But the idea is here to understand that commercials are producers and processors as belong to the group commercials, and non-commercials are large speculators like banks and funds. We have for each market a certain number of contracts. If you trade more than this number, you are large speculator and you have to report to CFTC. For example, in cacao market, if you hold more than 100 contracts, 101 contracts of cacao, you are large speculator and you have to report to CFTC. So your broker would say or would inform you and would send you all the information to report your position to CFTC. So on the rest are non-reportables, small speculators like you and me, also private trader, and maybe also small funds or small banks who don't reach this certain amount of contracts. So first 2 groups are have to report, and the last group doesn't have to report. So then in the report, in COT report, we will find these 3 groups, and we will find also in total how many contracts are open. It calls open interest. So if you ask me on which group we will, or which group we have to follow, and which group consist insider information, I would say commercials, because farmer or Coca-Cola company, they have the best information about the price movement, or they can predict the price better because they are the first place on information. The farmer knows how is about his grains and how is about the weather, and he has experience how the weather in play, which impact has weather on his grains and something like that. And therefore we look only to commercials. Non-commercials or non-reportables, small speculator, for us not interesting. So on the next step, you see we prepare the data in the form that is user friendly. You can read this as a table form, but also in form of weekly chart with all the information what you need. For example, net position of commercials, net position of large speculators, open interest, and also an indicator COT index. You can find it on our website. So in the next step, you can see we have weekly chart of each market. Because the report we published weekly is we analyze the weekly chart or COT data on weekly chart. So, and you can see here the weekly chart. So then, and the next chart, you can see the net position of 3 trader groups from commitment of traders report. And the next chart, you can see open interest. So, and then last chart, you can see COT index. So COT index is an indicator. You can say also COT index is an accelerator. So what it means? It means we use, for example, we use COT index with setting 1 year. So, and this indicator take a look back 1 year and look for highest high during this period and lowest low. And highest high is 100% and lowest low is 0%. And this indicator he do that. This indicator do math actually or current position in terms of this range between 100 and 0%. So with this indicator, we can see do the commercials or have the commercials extreme position, or they are in the middle of the range. And we need the extreme position of commercials because the extreme position is a good sign or good signal for trend change or maybe for ending of correction. More for that later. So I trade based on COT report, or by indirect we trade based on COT report. We use the swing trading strategy. And I want to speak about advantages and disadvantages. Their swing trading strategy. So the big advantages is that this kind of trading, because you have different kind of tradings. You have day trading, you have swing trading, you have trend trading. But trend trading in commodities is not always a good idea, because we have contract within certain time, 3 months period, and we have also if we roll from one contract to other contract, we have big difference between courses, and so it is not good idea maybe buy futures like stock indices stock index or maybe financial futures, yes, but some commodities which has big cost of carry, it's not a good idea to use trading style like trend trading, yeah, and to stay in position 6 or more months. But today I want to show you that the swing trading is the best one. It was best one for me because when I start to trade, I was full-time worker. I was in the job from 9 to 5, and for me it was very important to find a trading style that fit my schedule, because during the time I am in the office and in the evening I have not the power to stay on screen or in front of screen 3 or 4 hours. Also I have a relationship and something like that, and to work 9 or 8 hours and then to stay on screen 4 hours, it's not the life what I wanted. So, and I decided not to trade daily in the last night session or in the evening session. So I decided for swing trading, because in swing trading based on COT data, you prepare in the weekend. So COT data comes once per week. On Friday, you have 2 days, on Saturday, Sunday, to prepare the data, to find good signals and to make a trading plan. And during the week, you need only between 15 and 30 minutes to move the position, maybe to open the position or to move the stop. And if I check my stats, I see in the past I did approximately between 2 and 3 trades per week. So, and you can see the management is here. So the time what you need to manage this position is very low during the week. It was good for me because I was full worker, and for me was very important to have a trading strategy that I can trade beside my office job. So swing trading, you need little time to during the week. That was very important for me, and so no conflict with most working hours. So in day trading you have conflict. If you speak about Germany, so my job in office started at 9 o'clock EM, 9 EM, and the Germany exchange started also 9 EM, and so US started 3:30 p.m. So, and my job ended 5 p.m. So you can see the most of the day trader use their open session because the volatility in the open session is high, and it is easy to day trade during this time period. But for me it was impossible because I was in the office. So, and trade from VC from toilet, it was not a good idea, I think. So the other point is low emotional impact. So if you are swing trader, and I spoke about I did 2 or 3 trades per week, and imagine all 3 trades was wrong and I lose money. So I did it in the week. So 3 trades in 1 week, and between these 3 trades, I have time to go to gym, I have time to meet my friends, to eat, to sleep. So I have time to recover emotional. So if you are a day trader and you are sitting in front of the desk, so you can have 3 losing trades during an hour. So, and you have no time for recovering. Maybe you drink a coffee or Red Bull, but this is not real recovering, you know, and therefore their emotional impact could be higher if you day trade, and this is low if you are swing trader on daily bars like what we do. So this because we have low emotional impact if when we are swing trader. High probability. So I think so, because if you are day trader and you are also full worker, I was a full worker, a full-time worker. So it comes from your work 5 p.m. So you eat something 6 p.m. So and then you have 3 hours to trade something in the last trading or in the evening trading session, and you can theoretical take only the range of 3 hours. So if you are swing trader on daily basis, on daily candles or daily bars, so and sometimes we stay in position 3 days, sometimes we stay in position 10 days, you take the range 10 days range, and this range is much bigger as a range of 10 days, only 3 in the sum, only 3-4 hour of the evening session. So I hope you know what I mean, but so this because I say this is swing trading on daily basis has higher profitability. Disadvantages. So you have to learn to hold overnight positions. This is a challenge because sometimes you have 2 or 3 contracts, you hold 2 or 3 contracts, it's Friday, and you have to stay in position because your price target doesn't hit, so didn't hit, and so you have to stay in position over weekend. And some people have trouble with that because in the weekend can happen everything. So terror attack that like 1 week ago on pipeline, oil pipeline or something like that. And the problem is in the Monday, maybe you will find a open gap market open with a gap in not your favor. So, and you risk can increase. So this is a problem, but you can handle that if you, in the beginning, trade with a small risk, or you can say also maybe I decrease my position. So we stay in position full, but in the beginning we take risk between 1 and 3%. So therefore, if we have a gap, so like last Monday, not this week, a week before, so our risk increased, a double risk, 6%. It's huge, but it's not a big damage to your account, you know. So the next point is you have to learn to give away the book profits. So that's also a lot of pain. The people have a lot of pain if they see big profit and the position is in plus as big plus, a big profit, open position is in big profit, but then their price comes down and maybe you have stop out and break even on your entry price, or maybe also the price hit you stop loss and you have to realize a loss. So this is a challenge here, so emotional to see that you was 5,000 and plus, and then you have 1,000 minus. So it's a big problem. But we work also a lot of with break-even stops to avoid this problem, and it works very good. So we can decrease our losses, and also for it's not so big problem emotional if you are stopped out at your entry price, so you gain is zero, your loss is zero, it's no problem. Bigger problem if you was 5,000 and plus, and then you have minus 1,000. So the next point is what we often see and feel. You are not allowed to mirror a trade. So it happens if you hit a trend. So and every day you see you open position the increase, you open the winning of your open position increase every day. So you take a look at your trading station and you see, okay, yesterday 1,000, today 1,500, next day 2,000, and so on. And sometimes we stay, if we have a good trend, we stay in position 2 weeks, 10 trading days. So in 2 weeks you can in this time you can merit this trade. Yeah, you love this trade because this trade brings you money. You feel good if you take a look at this trade. But then the trend change in not your favor, and the price comes down. So and you don't want to go out to close the position. So because you think the trend will continue, we have only a small correction, then correction getting bigger, but you think, okay, this time correction little bit bigger, but the trend, I believe in the trend because last 2 weeks it was only one direction in my favor. And then end of the story, you close your position with zero gain. So this is very challenging. So, and therefore, if you are long in one trade, it's not allowed to mirror a trade. You have to close the position if you see the trend is changed. So then you have to invest 1 year of hard work for training to get the skills what you need to be a good swing trader. So, and to earn money, to belong to 20% of traders who earn the money on the market. But I think this and everything what you want to be one of the best, you have to invest time and hard work. It's not only in trading, also in other fields. So to get certain skills, you have to invest money and time. So if you don't have time, money, you have to invest more time. If you have money, you invest time and money. And if you have no money and no time, so then maybe it's not the right things for you. So next, what I want to talk about is our COT trading strategy. And the COT trading strategy, I would say this strategy is robust because the drawdown in the last and the history of this strategy was maximum of 9%, so not more. And this fact, or because this fact, I can say this strategy is robust. So the robust strategy, in my opinion, should have 3 parts of strategy. So first part, fundamental analysis. The second part, timing, so or technical analysis. And the last part is risk and money management. And the last part is the most important part of this strategy, because the guru of trading, Larry Williams, said the success comes not from a secret strategy. Success comes from risk and money management, from right risk and money management. So, and this because risk and money management is very important part of each strategy, not only this strategy, of each strategy, I would say. So let's start with fundamentals. What I mean under fundamental, I mean also COT data. very important, COT data comes not from price. If you use technical analysis, most of the time, or most technique, or all technique, comes from price, from analyze the price chart, but COT data doesn't. So, and therefore, we believe that the COT data, insider information for free. So this analysis give us some edge in trading. So we analyze COT data, we analyze the weekly trend, we analyze sentiment. So sentiment is what they mass, or what they most of the people do, and we also analyze seasonality, especially by stock index and also by some commodities. Seasonality works very well. So after we did our work, so the combination between this analysis is for us a setup. So we built a setup in combination of these things. So analyze COT data, bubble, sentiment, seasonality, and if we see, okay, we have here a setup, we have a buy or sell signal, the right combination between these things. So we can say, okay, we can go to the next step. So on the weekly chart, we have, first of all, a signal. So based on analysis of COT data, sentiment, seasonality, weekly trend, and then we go to the daily chart and use their technical analysis to time the market. But very important, the step before shows us which market is hot, in which market we can expect a trend change or trend following. And so we did the next step only on the market, only when we have a sell or buy signal on the weekly chart. So on the daily chart, we use technical analysis to time the market. And here, if I think about my trading career in the beginning, when I was a freshman, and I see also a lot of people begin or start with technical analysis. They use technical analysis to find the entry in the market, to find the exit in the market. I think most common techniques in the public are technical analysis. But if they don't did their right work on the fundamental analysis, they will have wrong market. So that's very important. And therefore, is very fundamental analysis is a very important part of each strategy. So if you understand your strategy miss fundamental analysis, you have to implement it. Your trading will be better. You increase your performance if you implement right fundamental analysis in your strategy. So, and the last one, so by timing, by technical analysis, we use divergences to find the right timing. So moving average to understand we have trend change or not, and we use also price action patterns to go into the market. So the last part is risk and money management. So under risk and money management, I understand stop loss, price target, position sizing. This is very important point. I think it's most dangerous thing when you don't understand how to determine the right size, position size. So this is very dangerous. So you have to learn it. It's very important. And also portfolio management. What I mean under portfolio management. So if I speak about portfolio management, I mean I try to build a portfolio of position to avoid lump risk. What I mean with lump risk? Lump risk if I build a portfolio and I open position in crude oil, I open position in heating oil, and I open position in gasoline. These three markets are positive correlated, and if I open a long position in three markets, gasoline, crude oil, and heating oil, so if one market have trend change, the other market would have two trend change, so they increase and decrease similar. So, and therefore, if I say, okay, my risk is 2% per trade in each position, and I have those 3 positions in my portfolio, in the sum, I have 6% of risk in energy markets, in the market who correlated with each other. So, so I call it lump risk. So I should avoid it. I should build portfolio with position that not correlated with each other. For example, crude oil, then maybe gold, and maybe cacao, and maybe cotton, something like that. You know, then I'm well diversified, and avoid a lump risk. So let's start with some examples. So we can see a weekly chart of Canadian dollar. So on the weekly chart, you can see price chart, weekly price chart of Canadian dollar, then a net position of 3 groups from commitment of traders reports, commercials, large speculators, and small traders, open interest, and also COT index indicator. So we see COT index indicator comes into the sell zone. This indicator show a value of 0. So this is a sell zone. So we see the market is in extreme zone, and for us, this is a signal to take a watch at this market. So, but you can see this COT index was in extreme zone maybe 1 month, something like that, and you see their price increase. So COT index show us we have to sell this market. So, but the market increased, and then after 1, 2, 3, 4, 5, 6 weeks, the price began to decrease. So I read a lot of articles about the analysis of COT data, and also there are people who wrote these articles, they use COT index as a signal for to buy or to sell market. But the problem is that COT index or COT data, that is not a timing tool. This is a most common mistake what the people not understand. COT data show us the market is hot. We can expect a trend change, but it doesn't say us the trend change should be happen this week or next week. So, and if you understand that, you use this indicator only for pre-selection. So to select market, they are hot, but you have to respect the trend. And the life hack here is to wait of trend changing. And if you see the trade, what we did on this with this signal, so on the daily chart, you see the trend increase. That what we can see on the weekly chart is 5 weeks of upward trend, and then we can see the trend change to the downward trend, and then we went into the market. So We were in the market 1, 2, 3, 4, 5, 6 days, and then after 6 days we closed the position with a profit of $4,300. But to be honest, this trade was made on the big account. In the big account, we don't trade only one contract, we trade several contracts, several number of contracts. So the same trade we did also in the small account. Small account, we trade small account to show the traders in our trading group who has small account, how we trade a small account, because small account is, to trade small account is very challenging. You have to understand the risk and money management, and most of the people with small account have not the skills, they have not the experience. So, and this because it's very dangerous to start to trade with the small account futures without right skills. So on this small account, we trade most of the time only with one contract, and from last year and this year comes a lot of mini, micro futures in the market. So that help us to trade a small account because we can use the right risk. So without mini and micro futures, micro contracts, it was sometimes the risk was too high. We open in a position with one contract, you can't decrease because one contract is one contract. This is a small size, and your risk is 7% on a small account. This is huge, but you have no choice because there are no mini or micro contracts. But from last year and this year, we got mini, micros contracts, and it helps to trade a small account. So a lot of people say, also I read in articles that strategy based on COT data doesn't work for currencies and stock index. So it works for commodities, but doesn't work for currencies and stock index. Here you can see the performance of 2019 of our COT strategy. The place first is soft market. So soft market is means coffee, cacao, sugar, everything what you can see on your table if you have your breakfast. So at the second place was stock index, S&P 500, Dow Jones futures. So, and the third place was currencies. So you can see index and currencies second and third place. And we traded here this market with the COT strategy based on COT report. So my data or my performance showed that when the people say it doesn't work on currencies and stock index, it's not true. So I can show you a trade, how we trade S&P 500, for example. Very important to say, the trades in trend direction works better. I think to love or to respect the trend, or trend is your friend, most of the people heard that. So that's not new, but especially if you trade a stock index like S&P 500, it is a better choice to trade in trend direction. So this because we trade this market only long, not short. So it's very difficult to find the right timing for short trades. And therefore you have easy life if you trade stock index only long. So we did it, and you saw before we did also good performance with this strategy. So you can see, and the first chart is S&P 500 weekly chart. We are looking for buy and sell signals on the weekly chart. We analyzed weekly trend, we analyzed commercials net position, open interest. So we analyze sentiment, we analyze seasonal trend, and we also see commercial index is here in the buy zone. So we got our buy signal on the weekly chart. The second step, we go to the daily chart, and very interesting point here. If you use only technical analysis, you would say to go into the market on this price level is not a good idea, because we have here an resistance. So, and the market increase a lot of days in the row, and the probability that the market will correct, so, and the price will goes down is very high. But we did our signal on the weekly chart, and therefore we went into the market with our long trade, and so we were in the market 1, 2, 3, 4, 5, 6, 7, 8 days, and yeah, without sitting in the front of PC 4 hours per day, only on the weekend 2-3 hours to prepare the weekly plan, to analyze the data, and during the week only with between 15 and 30 minutes. So you can have your social life, your wife is happy, your children see you, and everything is good. So with this trade, also we did a trade on the bigger account with several contracts. We did $15,525 profit. So next trade on coffee. Yeah, most of the people say COT data works better on commodities. Yeah, it works in every futures market. So now I want to show you our trade in coffee. So very important to see what you can see. If you take a look at the chart, you can see that the signals in trend direction works better. So against trend, they works, but the probability of trend changing is not so high, but for correction is high. So if we got a buy signal, then we have correction of 2, 3, 4 weeks, and then we got a signal in trend direction, and toy signal I love. This is the best signal in trend direction, in direction of weekly trend. And you can see all the sell signals after ending of the correction here. So works very good. So we did here, a long trade. So we got a buy signal, and sometimes I trade also against the weekly trend. If I don't have a trades and I'm a little bit boring, I say, okay, I can try it with a small risk and small size, and only 1, 2, 3 contracts, and I trade against the weekly trend. So I did the trade here. It's what this trade was okay, because it was in the direction of a seasonal trend. So if I have a seasonal trend in the same direction, so I can say the quality of signal increase. So, and then I did the trade, we did the trade by insider week, and so you can see we were in position 1, 2, 3, 4, 5, 6 days, and we closed a part of position, and we were in the position with 2 contracts longer. But also you can see same pattern. We waited on the daily chart of trend change, and only after a trend change we went into the market. So now I want to show you a trade that doesn't work. So didn't work yet. Better to say didn't work. It was in the past. So because the trading what we did, that is not 100% profitable, we will take a look on the stats, on the key metrics, and the next step. But let's speak about this trade in Japanese yen. So you can see on the weekly chart we got buy signal, but the seasonal trend was decreased here, and it was not in the same direction. So we got buy signal. We did the trade on the daily chart. You can see the same pattern. We waited until the trend changed and went into the market, but we were stopped out with a loss of $4,426. So not every trade works out or works well, and that you can see on these stats. So overall, we have 26% of trades are winning trades. So if you do 100 trades, then you have 26, 60, yeah, no, 62 trades profitable, and 38, yeah, 80, 38, yeah, 38 trades are losing trades. A lot, but this is very important. You have the right skills to manage your risk, because if you don't have these skills, so you will have a problem. We are here in the future market. This is a market of professional traders. It's very important to understand. So, and the next step, I want to show you a performance of a guy who was a member in our coaching program. He is a host of a website. This website is in German, and this website COT-daten.de. This website, he write about COT data and about his trading. And if you take a look at his trading journal, you can see he traded in the beginning, because he started only with $25,000. He started with the trading only, he traded only currencies. And I asked him why he used the currency for trading, and his answer was very good. He said, I have a small account, so most of futures are too expensive for me. The stop loss is too high. So, but if I trade currencies, in the most of currency, I got a lot of times, or many times, I got small. I trade with a small stop loss, with a small risk, and currencies is a market with a strong momentum. So sometimes only 2 days and your price target is hit. So this was his decision to focus only on the currency market, and so until he doubled his account. So this is very good strategy, and it shows you that the trading based on COT data works on currency very well if you focus on this market and you use the right strategy and right risk and money management. So I have good news for you, because if we can do that, if I can do that, the host of the website, what I showed you before, can do that, and you can do it too. So I'm average person. I have no special skills. So I'm not a smart person in the school. I was all the time average person. And therefore, you can do it too. You can have same results. So I believe in that, because I saw a lot of people who started trading based on COT data and who reached their goals very quickly. So 5 steps to your trading success. So first step is you have to read about swing trading based on COT data. You have to find the right articles or books and read more about how to trade based on COT data. Also, what you can help to improve quickly is to find a mentor, or you can use a self-study with the books. and so on. So then second step, after you understood how to trade based on COT data, you also created your own strategy, or you used that what I show in this webinar today as a start point to create your own strategy. It's very important you have to test your strategy historical. You have to see it works, it worked in the past. So if it did, then you can say, okay, this is not the guarantee for the future, but you will get confident in your strategy. So if you see, so it did good work in the past, so you earned money in the past, so that give you good feeling and increase you trust in the strategy and you self-confidence. So and you have to do a lot of tests, lot of historical tests on different markets to get a good feeling to this for the strategy, also to good feeling for risk and money management. So if you got it, you can see, okay, your strategy works, so you can deal with the risk, so you understand your strategy, you understand the strong side and the weak side of your strategy. The next step is demo trading. Most of the people don't do demo trading. They start with real trading, but it's very important to start first of all with demo trading, and I try to explain why. So we see very often if the people start too quickly with real trading, so they are not familiar with the process, so they have not the routine, so to proceed correctly. So they maybe they think they put into the market stop loss, but they put into the market limit order, and so they do a lot of mistakes. And when they do these mistakes on the demo trading, on demo account, it costs nothing. So it doesn't cost money. So that's very important to understand. If you start with real money trading, every mistake what you do, because your process is not clear, it's not a routine, so it will cost your money. So start with demo trading to understand, okay, you can handle it correctly, you understand what you do. And the next step is also to earn money on demo trading account with the strategy. If you see you earn the money on demo trading account, if you trade this strategy, it increased your confidence in the strategy and also in your skills a lot, you know. So then this is a second step. You have before you did historical tests, so that increased your confidence. In the second step, you was successful on demo trading, it increased your confidence, and then you are now I can say you are able to start with real money, because demo trading, historical test, this is kind of doing without emotion, not so much emotion. But if you start real money trading, you have a lot of emotion, and you have to proceed correctly, so in automated way. So because if you have emotion, every weakness will increase. You know, if you have a weakness and if you don't understand which how your strategy works, and you have not confidence in your strategy, and in real money trading you have emotion, so and you confidence you lose very quickly confidence in your strategy. And this because it's very important to do step 2 historical test and step 3 demo trading to get this confidence in the trading strategy. So, and not to end if you have two losing trades or you have the small drawdown, not to say, okay, it doesn't work, I have to try something else, and you go and try another strategy. Another strategy also doesn't work, and so on. And you spend a lot of time with different stuff, but you stay on the same place year for year. So you have to focus only on one thing, one strategy. And on my example, you see that the swing trading based on COT report works. This is a profitable trading strategy. So if you focus on that, so you will be successful. So, and also invest in education, but I think it's also clear, because if you want to get more, if you want to grow in your field, you have to invest in yourself. So first of all, I think it's a good idea to read a book by Larry Williams about commodities and trading based on COT report. So this is a good book, and I think this is a good start. So second one is book by Stefan Brise, also about COT report, how to analyze COT report. And I think in these two books you will find a lot of ideas to build your own trading strategy based on COT report if you want to do it by yourself. So also I wrote a book, but now I have this book only in German, but we translate this book coming soon. So so next step, also you can maybe, if you want to have an idea how to build a swing trading strategy based on COT report, you will find on our website also description of our trading strategy, and also description how to use seasonality, because the combination between the COT data and seasonality is can increase your performance too. The problem is, if you read a lot of books, you know everything, but if you don't use, if you don't practice, if you don't implement your knowledge into your trading, you won't be successful. It's a big problem. So outside there in the internet and everywhere, there's a lot of knowledge, but the place where you can practice that what you learned, I think such place is very difficult to find. So it's very important also what you read and what you learn, also try to implement and to practice, and not to start with real money trading. So to implement and to practice first of all with historical tests, then demo trading, and then real money trading. So okay, so we offer a membership in our trading group. So in this group I show how I trade the market based on COT report, so which market I choose and how I trade it, and so if somebody interested, he will find the detailed information on our website. So this is a membership plan, but you can find this information on the website. So, and membership in this trading group, I shows the trading plan for the next day. So I for the next trading session, it's better to say. I show what I want to do in the next trading session. So therefore we are very transparent. So you can see when in trading plan, I say in the next trading session, I want to open a position at the high of the day, for example, and I do that. So, and so you can you can see that what we write in the trading plan, 100% we do that in our trading. So, and then you can also check the results. So we have that results what confirm or the better to say what we plan, we do that. So also you can do it by yourself, or you can do it if you to find a mentor. So there's a lot of mentors outside. So I'm trader and I'm also a coach. So and I offer Insider Week offers a coaching program. So Philipp was took a part in our coaching programs, and Philipp will say a little bit more about this. But very important to understand, it is better to start as soon as possible, or to be profitable, to make profit, because compound interest is very strong weapon. So if you start 2 years later because you want to use self-study to self-study, so after 3 years, after 20 or 30 years, you will see huge difference between your account. So between start now or start 2 years later, you know. So Philipp, maybe you can support me. You can say something to the coaching program, because you was a part of this coaching program. Maybe you can describe it better than me.
Yes, sure. Thanks, Max, for the presentation. Yeah, the coaching program is very good because one thing, the duration is 12 months. So it is not a weekend coaching or just a monthly coaching. I can share my screen.
Screen, yes.
Yes, screen. Where is it? Now, can you see my screen?
Yes, I can see that. I can see the coaching.
You can see that. Okay. Let's move this. This one is the coaching schedule. Sorry for the German. The German coaching schedule, and this one will also be the same for the English version. And here you can see the whole 12 months. So first, like Max mentioned, you will start with the theory part with all the 3 fundamental things, like fundamental analysis on the weekly chart, the timing on the daily chart, find the right target, risk and money management, and one of the most important things, you start with the historical tests. That's how you gain trust. You become self-confident with the strategy, and yeah, this is really important, and it was one of the most things I was missing in other coaching programs I took before. And after that, you have 2 months of demo trading. So second and third months is demo trading, where you study more everything, all the details about the trading strategy. You do the demo trading, you gain trust, you know how to write the checklist and the trading journal, which is very important to learn about things or from things which didn't work out. So if you have a loss, then you have to analyze the loss and find the root cause, if there is any root cause, and implement it into your trading. And of course, then the longest period, months 4 to 12, will be the real money trading. And there, the goal is, of course, to gain more trust. You do this with more historical tests from all markets, all different entry patterns, all different parts of the strategy of finding the right target, of stop loss setting, and so on. And yeah, once you gain enough trust and started the real money trading, your goal is to earn money. And first of all, earn the money back what you spent for the coaching program. Yeah, and for me, the whole coaching program worked out very fine, very well. I enjoyed it really much that it's that long coaching. And of course, you will not be left alone in the coaching. So there is a weekly trading webinar on Monday where Max or the coaching team is showing all the trades and trades for the next week and going through all the markets. And then there's a theory webinar about Trade Navigator, the software we are using, and of course all other theory questions. And then there is a mastermind webinar which is connecting all the coaching members to each other, that they can share their knowledge and that they learn from each other. Okay, Max, should I shortly show the membership site?
Yes, yes, you can do it. Also the coaching, maybe. Yeah.
Yeah. Okay. Then I would quickly go to the German membership site. This will everything be in English from 1st of June. So that's the coaching site. Here you find this UT strategy where this webinar is about. And as you can see, when you click on this, you find the theory part with the introduction and the fundamental analysis. Once you click, and all the other parts, once you click here, you find many videos where Max is showing you and explaining you all the details about the technical skills you need. So you know everything afterwards. It's a step-by-step explanation, and you can see the videos as often as you want. So it's not, you can write notes, you can look them again, and yeah, that's very nice. You find videos to all different parts of the coaching program. Here you find timing on the daily chart, risk and money management, and then how to do the demo trading. And one really important thing is that after each coaching part, you have to do a homework. Now, maybe many of you think, oh no, homework. I don't want to go back to the school bench and do homework. Yes, you can name it different. You can name it you gain experience, because with your homework, you have to do things. You do the historical tests. You go through all the details of the weekly and daily analysis, that you can see that you are able to see the patterns, you see the divergence, you see the bubble, and all the different things which you need to find the right timing and the right market. Then you will hand in the homework to the coaching team, and you get a feedback. Things you do good, things you do bad, and yeah, This is really helpful, and you can do this through the whole year of the coaching program. Another thing which is really important is that we have the membership trading. Like Max already mentioned, there are daily and weekly trading plans. So at the weekend, there are 2 videos every Sunday. So once is the trading history from the profit and loss from the past week, and then you find the trading plan for the next week. There, Max is going into all the details about the Insider Week setups, the new setups you see here. So this is the COT map, which is also in the member zone, where you can find all the COT signals. For example, which one? I chose the S&P 500. It looked like this. Here you can see the new signals. You can see the chart. And last weekend, there was a sell signal on the S&P 500. And of course, which is also in the trading plan, is you have daily trading plans. For example, last Monday, this is how a trading plan looks. In the bottom, you see the open position. There is the open position in oil, in gasoline. Sorry, in gasoline.
Gasoline.
Yeah, gasoline.
Sorry.
Gasoline, and also you can see the comment. You can see the stop loss, and you can see if Max is planning next trades for the next days. And that's one thing what you get, and which is like comfortable, which gives you trust, because he did one thing you want to reach is you want to reach the same performance than he did. And like you see here on the screen, and like you already saw in the presentation, this is a performance from $14,000 to more than $600,000 in 7 years. Everybody want to have kind of this performance with even no drawdown lower than 9%. So I think that was a quick look into our member zone. If you have any questions, you can type them into the chat window, I think. And yeah, if you're interested for our new coaching program in English, then write us a mail to info@insiderweek.com.
Okay, Philip, thank you very much for your presentation, for your feedback, and also that what you show in member zone. So now we have time for questions. If you have any questions, please write it in the question window. So, and we will answer the questions from now. We had some questions also. We got some questions. For example, the one question was, why is our drawdown so huge and what we want to do to reduce drawdown? But I don't think our drawdown is huge, because our drawdown was maximum 9%. And if you have a trading strategy with a drawdown of 9%, I think this is a good strategy, and I don't think the drawdown is a huge. But of course, we try to find a way to reduce the drawdown. So we work on that all the time. But I think we have already good drawdown, not so huge drawdown. This drawdown is small, in my opinion.
Yeah, it depends on the size of your trading account. If you have a trading account like you have on your public account, bigger than 600,000, then and you have a drawdown of $50,000, then this is sometimes more than some people have on their trading account in total. So of course, then this is a very big drawdown for them in absolute value, but in the percentage, this is okay.
Yeah, you have to take a look at percentage. So we have questions now. So what is the price of the coaching? So Nico, I would prefer you write on the info@insiderweek, so that what could you show please it again, this email address?
Sure.
So then we will send you the coaching program in whole with all the description. Please write an info@insider-week.com on this email address, and our sales department will send you a program with the price.
And we'll get in contact with you.
Yeah. Thanks a lot, Max, for your presentation, useful information. Thank you very much for your feedback, Hassan. So I have a couple of questions about the COT signal. So is it depend on COT index 26 weeks alone? Yes, we use setting of 6 months in Trade Navigator is that 26 weeks. Why is drawdown increase after 2018? So we speak here about trading, and we speak about markets. If you take a look on commodity index, you will see the commodity index show the commodity prices, for example. We not only trade commodities, but this is a good example to see that the market is not each year the same, you know. So you have your strategy, so your strategy is the same, your skills improve, but the market change from year to year. Sometimes your strategy work better in some years, in some years less better, but you can see on the performance of the last 7.5 years, we did good job in a lot of different period of market, because in the last 7 years we had bullish market, bear market, we had range market. We did good job. We did profit in each year. So this is very important. So, and also if you trade a account of 600,000, it's a big difference if you trade account of 50,000, you know. 50,000 maybe, if you lost 50,000, yeah, it's a big account, huge amount, but maybe you have to work next 5 years to save 50,000 again. But if you lost 600,000, so it maybe you need a whole life to save 600,000 again. So therefore, if you trade a big account of 600,000, you trade it different, a little bit different in terms of risk and money management. So you try to take less risk, you know. Okay, we don't have questions anymore. Now we have 90 minutes, so it took a long time. I thought we need 45 minutes maybe, and in the some 60 minutes, but I spoke very slow because my language skills, but I hope you understood everything and you understood their idea, and also now you got some valuable information to start your trading career based on COT data, or maybe also improve your trading. So I hope so. So we have no new questions. So I learned from Larry Williams. So this is a guy who opened his trading strategy to the public because he traded also on the COT data. And I learned from everything from him, either from his book. I show you his book. Also, I think his book is a good start to. This is a good start to understand how the trading based on COT data works. So I have one more question, please. Okay, Hassan, please write me a question about the confirmation of COT signal by commercial buys and open interest drop. Commercials buy and open interest, how it works. So I think it will take a long time to explain that. What I can say, please check the open interest in terms of weekly trend. You will see the open interest increase in weekly trend and decrease when the weekly trend is in correction. I think it's for you a good start point to analyze the open interest in terms of weekly trend and to find some ideas, because if we have upward trend and the open interest increase and then we got a correction, and in this correction most of the time the open interest decrease and commercials netto position increase. And this is a good point to say, okay, this is not trend change, this is a correction only, and we have to wait until the trend, the price will start go in direction of the weekly trend. This is a good point to trade in trend direction. Most of the time we got also a signal, buy signal, then by the end of the correction. It would be confirmed, yeah, correct, it would be confirmed the buy signal. Okay, guys, so thank you very much for your time. You took a lot of time, so I hope I show you some valuable information and you was not confused about my language. I did my best, and yeah, I hope to see you maybe in the coaching program or in the trading group praxis, or on our website, and I wish you a good evening and yeah, good trading results in the next trading week and also in the next future. So bye and see you next time. Bye, Philipp.
Yep. Bye, Max. Bye, everyone. Thanks for being with us.